Good afternoon, traders. This is Christian from Hertz Traffic at Trade Group, and today is Tuesday, October 4th. Big market participation day, big market rally day. Very impressive all around. S&P finished up over 3%. So did the Qs, and then look at the micro caps, the small caps, the mid caps. They all finished close to 4%, especially IWM and MDY. Very, very impressive. The TLT, not a factor for the day. Remember what I said yesterday, that just the volatility needs to go down, right? It doesn't have to be exactly a one-for-one relationship with what bonds and equity are doing. Just the overall volatility needs to basically needs to chill out a little bit, and then equities can go back to what they're doing normally. So I think we had more of that. Also, when you look at the US dollar today, which, where's my other screen, which I have that on, was down 1.4%. So let's talk about that just for a minute, and then I'd like to get into what obviously equities did. So I like to kind of cover those macro things first. First things first, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for information purposes only. Just changing around my spreadsheet there a little bit, needed to update that. So let's talk about the US dollar first. This is now 1, 2, 3, 4, 5 days in a row that we've seen the dollar go down. And that's one of the headwinds that was kind of, causing a bunch of problems. A lot of international markets, right, getting involved and hearing about what is going on over there in Europe, that really caused a bit of tension in the market, as well as probably some other things, a lot of worries in Europe. So it's nice to see the US dollar come back down from getting parabolic. Remember, I said it would take a little while before if we knew if it was a blow off top a little bit. I don't know if you can make that conclusion, but regardless, it's still in an uptrend, but definitely needed to basically give this back. So very, very nice. I had a trade in UUP puts 30 strike that expired on Friday. I kind of wish I would have had that, put that out for another week, because I would have made some nice money on that. But that's a whole nother story. One of the things that I wanted to talk about too, before we get into the technicals of the indices and some levels to watch, was the breadth today. The breadth to me is very important, and I'll get into that, but here's where just the raw numbers were: 495 advancers versus just 6 decliners. NASDAQ 2431 versus 371, and the Dow stocks, all 30 were positive for the day. Now, that's the raw numbers, right? Advancing versus declining. What I think is more significant is when you associate volume with that. So why is that important? Well, let's look at a chart with the S&P, and this is what is referred to as up volume. So the volume associated with up moves, and then divided by the volume associated with down moves. So you could kind of see what I'm getting at in terms of the chart and what it looks like when there's really strong up volume. So again, nothing is 100%, especially this year where the Fed is tightening. And by the way, there's no change in that. Despite kind of coming in this morning and hearing that, hey, equities are rallying on the hopes that they may not raise interest rates as much or as fast. I don't know, something to that extent. But there was no change today in the interest rate expectations. All right, still we're looking at 75 basis points for November, and then we're looking at probably 50 basis points in the December meeting. Now it does trail off, and that's been the case, right? It's about 25 basis points after that. So again, the pace does, and it looks like as of now, that's what the market is priced in. That's where Fed fund futures, and I say the market, but it's really Fed fund futures as the instrument. That's where the market is pricing in future rate hikes. Now, this is not set in stone. We've seen this change many times. It's going to be dependent on what the market, on what inflation does, right? Again, that's just my opinion. That's something that we have seen over the last couple of months, is when the inflation numbers come in hot, the probability of interest rate hikes, go further higher, and get further drawn out. So That remains to be seen. We have had a couple data points that have been outside of the inflation data. We had JOLTS jobs openings today that came in a little bit lighter than expectations, right? So right now the bad news, right? This missed versus, how many job openings that are out there. So for the second day in a row, we've seen a negative data point, right? Yesterday it was the ISM manufacturing that came in light, and the bad news is being interpreted as good news for equities. Again, not for the economy, but for equities. Remember, they're two different things. All right. So that's really going to be, I think, the driver. But you could see what's going on here, right? And you could kind of why we like to look at the price action by itself, as well as some key indicators such as this, because it gives us a picture. And sometimes the market, most of the market is forward looking. So it's important to remember that. But yeah, I mean, this wasn't the highest peak. It was the NYSE breadth was over 20 today. And you could see that in past, here was one where we got over 15, and that marked the bottom of right around the bottom of 2020. Similarly, what happened at the end of 2018, right? That also helped mark the bottom. So again, I'm not calling for that. I think there's much more analysis that you want to be doing, that I want to be doing, but it's kind of interesting because we haven't had this type of breadth like that before, and we haven't had this high of a reading since the end of 2018. Again, significant, right? We look for things that change, right? And that are, that jump out like this. Okay, so it's something to kind of keep in mind. But I'm not going to go out and, I'm not going to stick my neck out and say that the lows are in for this year. I would rather do our analysis here and, a couple things. So in yesterday's video, right, I like to kind of start off where I left off the video yesterday, but we rallied right into the top of value yesterday. Clearly, we didn't have much issue getting over that. We paused at the top of value right before we broke through it, and then we've been basically in a 45-degree angle here, moving higher. So the next spot would maybe be 3832. I see on the 1-hour chart, and maybe 3831. So see if there's anything jumping out here on the 5-minute. We're going back 180 days. There is something here at 3892 as well, right? Again, we're looking for where there was high volume, where we haven't returned back to. Those are called virgin point of controls. The 1-hour, no problem getting into value for the day, or for the month, I should say. And now we've got the 20-day moving average. Okay. Now, also, what else is going on here besides, the technicals in here and recouping, getting back inside value, getting back above the 5-period moving average. Again, have to worry about the 20-day moving average. But, what else has occurred here? Well, we got out of September, right? How many times, if you're a regular viewer of my videos, you know that I've talked about getting out of September, the weakest seasonal month of the year. So again, I'm not saying that it's all blue skies from here, but it is it's a matter of probabilities, right? Just October is a much better month seasonally, and September is the worst one. So again, I'm not saying that every day is going to be up. I'm not saying that we're not going to hit some type of volatility. But I think so far the first 2 days of October speak for themselves. Again, why I said that we needed just to get out of that month in terms of the volatility and the very, very weakness. Again, not the only part of analysis, but something interesting. All right, IWM had a huge move today, up close to 4%, closed right around the highs, 176. I sold mine a little bit earlier. This was, I mentioned in yesterday's video, I went long some IWM as a swing trade, and I decided to take that trade off for now. Another point, and we did this Twitter space earlier with the guys over at Benzinga, was talking about the VIX around 30. Stocks tend to move together. Correlations are higher, right? So again, you can kind of mix and match your positions a little bit depending on what your exposure is and what you want to be long. But you don't have to be long all single names, right? When the VIX is this high, you could just be long IWM or something like that, and that's 4%, right? That's no joke. It is what it is. It's what a lot of stocks were up today. All right. And then, of course, something that we talked about yesterday, which was the mid-cap ETF. I thought that that was showing a little bit of relative strength, a little bit of a better picture. And IWM looks interesting, and we'll see. You know, this also did hold. It held where it needed to, 200 period moving average. So, you know, this is just a weekly developing bar, but I would say overall pretty decent. All right, getting back to my spreadsheet here with the areas. So that covers the macro review. We also saw gold and silver add on to those gains. I sent out a trade idea yesterday, and that was something that we talked about yesterday in the Substack that I sent over, you know, talking about WPM had another big day today. It did take out this 35 level. So now we'll see if you're interested in gold and silver, if that continues to trend, but I wouldn't be surprised if it backs and fills a little bit. All right, so I wanted to cover that with the gold and silver. VIX, I was surprised it wasn't down more today. Right now we're sitting at a VIX of 29, but there was still volatility in equities. It was just to the upside. Right? Sometimes that confuses people. The majority of time you see volatility only to the downside, and it's rare when you see volatility to the upside, but we did see a little bit of that today. So, but nevertheless, the VIX still went down. All right, best performers. Well, Chinese internet names. You know, some of the names with high short interest did you know, accelerate to the upside, right? I mean, there's a lot of short positions out there. So I think that's also kind of par for the course today to see some of the most beaten up areas rally. There was a couple of those. Blockchain stocks were up 5.6. I mentioned the Chinese internet names. Clean energy had a really nice day today too, up over 5%. And what else is on that list? Yeah, still a lot of material names, you know, a lot of like metals and mining names as well, which outperformed yesterday. Also, what's different, the banks were up 4.5%, over 4% for the session. So that's different, right? And if you look at the regional bank ETF, you know, again, just like the indices, it's rallying in a downtrend, you know, for now. But I think there was a statement that was made that was pretty interesting by Bank of America today. I'm not sure which manager made the statement, but they were talking about how a lot of people, there's a bull market in financial advice. Interesting. Well, take a look at some of these brokers, and we'll go right to my favorite one out of the group. But look at LPLA, right? Out to new highs. Right? Finally seeing some names get back out to new highs and up 6.3%. So this is pretty interesting. Now you may look at this and you're like, oh, I missed the move, right? A huge move today, up 6%. Well, put it in perspective, right? Basically, since the beginning of August, it really hasn't gone too far. It's kind of just been in the same. This is the first day of the breakout. First day of the breakout, I think, are fine. Another thing to notice too is notice how well this stock has been holding up. While the rest of the market has been going down, this stock has been going up. Another one that I've looked at a couple times in the last couple months was Schwab. Still, I think Schwab has to get some resistance, has to get through some resistance, and I haven't pulled the trigger on this name yet because I would rather be a little bit late. And that's going to be 78.12, right? So again, you could play it for a couple dollar move, but I need to see it get back above the value area for the year, and that's 78.12. So pretty interesting area. Also, a couple of the, you know, again, some of these names may not be on the top of your list, but I found them interesting. Progressive, some of the insurance names, very strong. This name, not that strong in relation to the overall market, but you could see established uptrend, right? And it did trade a little bit below the 50-day moving average, but really nice move in Progressive. Unum was another name that was very strong, which is life insurance that got out to new highs today as well. All right, so those are a couple names. I just get to my trading blotter. I mentioned, you know, here's what I did for the day. I'm always, you know, just to get into a little bit of strategy, I'm always a net seller on gap updates. It's just something that I've learned in trading. It doesn't mean I can't trade other things. It doesn't mean I can't add on a little new exposure, but overall, I want to be a net seller, right? And I did add Wolf. right? Which is one of my favorite names in the semi space. But yeah, I took off targets, and I took off ALB. It hit my upside target, right, which is a 1 hour VPOC. Again, always mapping out our trades, right, and realizing, once we put on our trade, establishing our stop, establishing where we want to take the trade off, right? CEG was another name I got long yesterday. This actually overcame the virgin point of control. This looks pretty good here. So nice add yesterday, and almost out to new highs. Also, First Solar, big, and I didn't own any of First Solar, unfortunately, but real nice move out to new highs today. Again, I would call this the turnaround stock of 2022. Remember, First Solar was kind of an underperformer in this group, and it really came alive with a big earnings report. Again, it goes back to, now that we've got more earnings coming up, right? We've got another quarter of earnings. People are very fearful about earnings, but you may find some hidden gems that come out of this, right? If you thought that you chased on day 2 after First Solar reported earnings, right? That was when the stock was 94. The stock's up $50 from there. So it's very important, right? Earnings. We say this all the time, and I try as many times to repeat it as we get into earnings season, is that you will find potential leaders for the quarter based on earnings reports. And this is a very good example of that. Stock, again, if you felt like you were, oh no, I missed the move, right? It moved from 75 to 85. I hear this all the time. Traders don't trade some of these names because they feel like they missed the move, and then they try to look for another name in the sector thinking that they're going to find a similar move. No, stick to the one that is super strong, the one that had blowout earnings. You're going to find that the institutions are going to need to start accumulating that name after the new information is out. Take a look at the volume, right, that occurred after earnings. This is all accumulation for the most part. There's some selling in there too, but for the most part, this is the institutions buying. Take a look at the volume before they had good earnings. There was no interest in the stock, right? Now it becomes interesting. All right. So again, the reason why I'm going over this concept in detail is because I hope it answers some questions once we see gap ups on earnings, and especially a name that wasn't doing much prior to the earnings report. They could be potential leaders. And again, I would call this one the turnaround stock of this year. All right. So other names, just to kind of go over, I always go over what I did. RVNC, that was good enough for me. I took this trade off. This was a name I got long towards the end of last week. It actually almost went out to new highs today, but I got long in here on the turn, and this worked for me. Not every trade was perfect. I dumped CALX. This was a name that I traded last week. I just thought it had a chance to get going. It really didn't do much. The chart looks fine. It's just a question of what I want to hold on to and what I don't right now. And I would rather be a little bit more nimble. DGII was a name that I was whining about yesterday because I didn't get into it. Made a move all the way up to 38.60, another software play. Another name that I was looking at this morning that I did start a position in was this YPF, going back to, some energy type exposure. They are located in Latin America. This is Argentina, and they are both a conventional energy, nat gas, and I think oil, as well as some alternative energies. So really what I'm looking for this is looking at the trend. It's only a $7 stock. I'm looking for this to get above the 200 period moving average here to really break the trend. So this is a little bit of a preemptive position for that. Wolf, right? Again, go back to the ones that really work. Wolf, I would like to see this get over 120. I did take a couple targets in this thing. So 120 is really the bogey to watch for this. And if that happens, then we can target 124 and 133. But for now, just to move through the value area was something that I thought was good enough for the day. All right. And what else? I think that was basically it. A couple other names that I'm watching for tomorrow. I mentioned LPLA. That's definitely a name that I'm watching. Las Vegas Sands has been back and forth like this. So let's see if this name could actually start to trend. The casinos, we're hearing that there's more traffic going back to Macau But again, that's a little bit uncertain. Speaking of China names, this PDD was pretty nice today. Right, this is probably best in breed. I always get questions, right? I get questions from members. There's a question today about, hey, what do you think about emerging? What do I think about, emerging market stocks? Well, it depends. There are some that look fairly decent, but I wouldn't start buying names, in any area of the market that are in downtrends. Something like this. Now, China is clearly more risky than U.S. securities because of the political nature that's going on there, but this made a nice move, right? Maybe this thing can kind of rally up to the top of value. So that's something that I would look at in the space. I mentioned the YPF already. Another name too, which I didn't see how it looked today, but this is a Indian bank. I'm watching this one tomorrow to see if we can get back above the 50-day moving average as well as the bottom of value. What else did I have on my sheet for the day? Yeah, I think that's I think we'll leave it there. Again, a lot of participation, breadth really strong. It doesn't mean that we go straight up, but I like what I'm seeing. I mentioned this in the Twitter space that I did earlier today, right? Seem like there's a lot of people who are, think that the world's going to end and that we're going to break the lows and it's going to be 2008, right? You have that group. There's another group that thinks that we're going to go back to new highs. I think, both of those, I think if you could stick in the middle and be nimble, right, and trade one day at a time and have reasonable expectations, I think you're going to do much better at this. A special for the last quarter, I extended that to today. So if anybody else wants to get in for last quarter special, you can find that on my Twitter feed. I think we still have that open one more day for you. It's 35% off the normal rate. So if you're new, you haven't been a member before to Tribeca Trade Group, it's a new member special for the last quarter of the year. All right, guys, have a great night. See you tomorrow.